Welcome to another inspiring edition of the Brandi Jo Show, your weekly dose of wealth and wisdom for a prosperous financial life. And here's your host, Brandi Jo Newman.
So Formosa investing.
Mm-hmm.
Tell me about the name Formosa, first off.
Well, it was actually named after the Portuguese. They discovered the island Taiwan before the island was called Taiwan, which is where I'm from. And this is way back in 1500. They named it the Formosa, which means the beautiful island. And ever since then, Taiwanese took that as something that we're proud of. And, we, as soon as we see the word Formosa, we recognize it. It's basically my brand. It's the niche I'm targeting.
So the niche that you're targeting.
Taiwanese investor.
Okay. So why target them?
Well, I joined this mastermind group. They said that, when you first start off, you got to just find your niche, right? And then expand from there. I know the concept is really difficult to grasp, but, if you're able to create an audience where people are able to relate to you, it's easier to start building that way and expand once you create, your own tribe, so to speak. And that's why I created this Formosa to target my people, my niche, because I realized that as my real estate career grows, you are who you attract. And I think what I've noticed that I've been attracting a lot of Taiwanese American investors to invest with me. So that's why I came up with, this company.
Okay. So, it's real estate investing. Kind of take us through, your syndication model, your platform. Why can someone feel confident about investing with you? And are you looking for other niches, other people that are not Taiwanese?
Absolutely. Okay. So again, the reason why I mentioned the concept is difficult to grasp to target your niche is because that's exactly how I thought when I first joined this mastermind group. Like, I don't want to just target Taiwanese American investors. I want to be able to expand and allow everyone to invest. But the idea is, you have to start out with your niche and then expand that way. Right. Why do Taiwanese want to invest with me? Well, because I have track records I've been a real estate investor since 2015. I started my very first job out of college was working at LoopNet and CoStar. If you don't know what LoopNet is, it's basically Zillow for commercial real estate. So and so that's how I started my career. I've always been in the real estate industry, so I have a pretty good sense and knowledge when it comes to real estate investing. Because working at LoopNet taught me a lot. I was able to speak to real estate investors, lenders, property managers on a daily basis. So I learned the importance of having multiple stream of income. So and the reason why I got into syndication is because not only can I help myself build financial freedom, I can also help my friends and family build financial freedom. So it's a win-win situation, and I think what most people need is just focus on what they do best and let the real estate experts handle the passive investments.
Right. So it's a true passive investment, which means they basically, when I explain this to my clients or people that are interested in investing in syndicated real estate deals, are you don't have a say, and your money is in someone else's control. I found that the majority of people that come to me through the lens of infinite banking, leveraging cash value life insurance to invest in real estate. They've never been a landlord. They don't even know what type of property to target. And most of the time I find when I decide that I'm going to coach them is that they don't have a clue. And they don't really understand the intricacies of basically making sure that someone pays their rent, whether it's commercial or residential. As long as there's a market, 90% of the time people are going to pay their rent, but it's always the amount of not only the money that they put up, but the amount of money that they're on the hook for, and then having to service that debt on their own. Some of these infomercials and infotainers, they make it sound really easy. And, and there's this sub-2 movement now where you can, basically get somebody to own or finance it and do a wrap, which is great if you have a relationship with the person, but you have to establish that relationship. Truthfully, I'm just not one to work that hard. And so when someone comes to me and they're like, Brandi, I want to take my $500,000, my $750, and I want to buy a multifamily 16-door unit. And I'm like, why? Why do you want to do that? If we're all trying to, because, the bottom line is, why are you doing this? And it's to make money. If the bottom line is just to make money, why don't you give your money to somebody who knows exactly how to start making money with that money immediately? And I'll tell you another deal. It was kind of a reverse deal. So I have deals all the time. I've got a big deal going in Kilgore. There's a small deal in Medina County. These are all people that want to build a real estate project, or they own the land and they want to see it being developed. These are the two projects I'm talking about. They will, people will come to me and say, the bottom line is that I want to make money. And I'm like, okay, if the bottom line is to make money, then when do you want to make that money? Number one. And so this reverse deal that came to us, it was a group of us. This guy says that he has $150 million to invest in real estate. Okay, great. That's not a lot of money, not today. So his background was affiliated with another real estate development deal here in South Texas, and he got kind of sideways with those people and took his money away and went and did something else with it. Now he's back in South Texas wanting to deploy this capital. And his kicker was, I want to start making money immediately. Well, if that's the case, then why not invest in a real estate bond income portfolio if that's the bottom line? My question to you is, what is the lag time for someone like, and let's build that ideal investor for your company right now. What is the minimum that you'll take from them? What's the minimum to have them actually get to the table and be serious with you?
The minimum investment would be 50,000.
Okay.
And the
accredited, not accredited?
Non-accredited.
Okay, so you have to establish a relationship with them, or are you doing, what is it? Section 144, where you can have 35 non-accredited investors in a deal.
506B. That's the
506B. Okay. So minimum 50 grand. What's the turnaround time before they actually start seeing some income off of the 50 grand?
So when we invest in multifamily, we target, it depends on what type of multifamily you're going to, you get yourself involved. The ones that where we target, it's value add, built in 1970. There's just more upside to it, and I'll explain the process of it. So typically we hold the property for 5 years, and over time we're going to use the first year's cash flow to renovate these apartments. And then by year 2, year 3, we'll refi, pull some capital out, make distribution. And then year 5, year 2 or 3, year 5, then we sell the property. That's where you get the big chunk of your money. So our projection is typically 8% pref return with 2x equity multiple. So the 8% return means, you'll get, if you invest 100,000, let's just use 100,000, easy number to use.
Yeah.
You'll get 8,000 passive income per year. And then 2x equity multiple just means that at the end, once we sell the property, you'll get 2x of your money back. So if you invest 100,000, you get 200,000 back. Now, to answer your question, go ahead.
But during that 5 years, you're getting 8% cash on cash, basically.
Yes.
Okay.
Per year. So what preferred return means that you're not going to see that distribution in the first year. Remember how I told you we're using the first year's cash flow to renovate. Yeah. So you'll probably see, maybe anywhere between 0 to 1%, because it does take time. Once we take over management, it takes time to stabilize the property. Usually it takes 6 months to a year. If the operation is going really well, it could only take up to 3 to 6 months. Depends. Every deal is different. So when that happens, whatever you don't get the first year, let's just say we pay you 1%. That 7% we still owe you, it does accumulate year after year. And once we refi and sell the property, once we have a big capital event, you get that big chunk of money paid back to you.
So it accrues or it compounds?
It accrues. It doesn't compound. Yeah.
Okay. What kind of deal do you have going right now? Like if somebody, emailed you or texted you after the show, what's the immediate deal that you're going to go into? And do you do it by deals, or are you one big fund? Are you syndicating out each individual property, or are you syndicating an entire fund?
Each individual property.
Okay.
Just to give you a little bit about my background, I just started syndication not too long ago. That's why I target deals that can take non-accredited investors, because when you first start off, your family and friends or your investors, basically. So
right, yeah.
And so with only 2 active deals going on right now, I have the second deal we're still raising on the back end, and that deal is in Jacksonville, Florida. It's a 382 unit apartment building, consists of 2 complex. One is 140, the other one's 242. And the projection is pretty much what I told you earlier, 8% pref with a 70-30 split, 2x equity multiple, hold for 5 years. The good news about that deal is that when an investor invests into that deal, they'll get retroactive returns. What that means is that, we closed July of last year. If they invest now, they'll get the distribution from July till now.
Okay.
Of passive income. They already started making distribution because operations is going very well. We're at 97% occupancy rate, I believe, between the 2 complex.
What was your increase in the rents?
So when we took over the project, it was at $800 on average. There's 1 bedroom, 2 bedroom, 3 bedroom, but then per unit. Yeah. Since we took over, we raised it to 1,000, and the renovated apartment units are going for about between 1,200 to 1,300. So about 55% increase.
Good, really good.
Yeah. Yeah, that's why we're able to make distribution.
Well, and the thing about it is that I have a client. She has a couple of units. I would consider them luxury units. So she's either she's able to get a premium on the rentals, on the fees. Mm-hmm. And she hasn't gone up on the rent in 4 years. 2019 was the last time she went up on the rent. I'm like, and she's already high. I'll give her that. And I'm like, come on. That's why this tenant is paying you on time every time. And it's a year-long lease. She had a couple of people in there that weren't very sharp on paying on time, and they were paying in increments, which is annoying. And then she got this other lady in there with, I want to say it was like the summer of 20. So the height of COVID, late summer, and just pays on time, every time, loves it, treats it like it's an asset of hers. I'm like, you got to go up on the rent, because that's the thing. People have to have a place to live. I'm very lucky in that my wife and I live in a very, very modest home, super cheap. And we're never there. We don't look at a home as an asset. We look at a home as a place to sleep, place to store stuff, and a place to eat. But when you get into luxury type rentals, people are spending more and more time there, and they want to enjoy that space. When you went up on the rents, did your vacancies go down just for a little bit? And I'm sure while you are remodeling and upgrading, did you have to shut some units down and then have that little bit of window of cash flow?
Yes.
Okay.
Yeah. So yeah, go ahead.
Let me ask you one more question.
Mhm.
How many people do you work with?
The entire GP team?
The entire team.
Oh, you're looking at probably for the second deal, the 400 units, you're looking at probably about 7 GPs. My first deal is around that as well, like 5 GPs. And everybody's role is different. Like
but
for
you're
me,
hiring, but you're hiring a contractor,
yes,
an architect,
yes,
an attorney, maybe an abstract person for variances, surveyor. What else? And then you have all the contractors. Workers. I mean, a project like that is what, probably upwards of 30 to 40 people at any given time that you're having to manage. I mean, it's nice to have 400 doors, but that's a lot to manage.
Yeah, ResProp does most of it.
Okay.
ResProp, they have $2 billion asset under management, one of the biggest property management company across the nation.
Okay.
So they have a system in place where they have a list of vendors, list of contractors, everything you listed. Our job, our role as asset managers to manage the property management company, pretty much, essentially, to give them, the outline, what to expect, how can we achieve our business goal at certain time.
When you picked them, why did you pick them? Because I'm one of these people that I like to delegate. Like, I have the idea, now you go and you do it. Most of my clients and most of my students that want to I actually deter them from trying to get into real estate on their own. I want them to be passive investors in syndications, in funds, in REITs. Because again, what they tell me is that I just want to make more money. Well, if you just want to make more money, this is how to make more money without basically working harder. So why did you pick this particular company to do your management?
It's all through a word of mouth, referrals, our network, mastermind groups.
And that's what I was going to ask. Can you mention the mastermind group? Is it private? Is it open?
Yes. Yeah. So the lead sponsor on these two deals, they're both from Think Multifamily. I'm not sure if you're familiar with the group. Mark Kenny.
I've heard of it. I haven't delved into it.
Yeah, so Mark Kenny, he's the CEO of the corporation. He's one of the industry leader in our space. He's been doing this for, I think, 30 plus years now. He created Think Multifamily mastermind group. Basically, you have to pay a hefty amount of fees to join, like $35,000 to join his mastermind group. But the beautiful thing about his group is that whatever piece of the puzzle you're missing, he can fill in for you. So for example, if you specialize in raising capital, if you have family, if you're connected with wealthy people, but you don't have the deal flow, or you don't have the team like you described, the real estate agent, the lender, being able to qualify for a loan, to be the loan guarantor, what Mark Kinney does is he's fill in all those pieces for you. And he lets you syndicate your own deal by being side and babysit you pretty much on your first deal. So you can learn the process.
Excellent. So when you decide that you're going to do this, what were you doing at the time? Because many people don't grow up and say, hey, I'm going to throw $35,000 into a group of people and see what sticks, and then go out and, manage assets of my friends and my family. What were you doing prior to getting into this industry?
Great question. So I was, it was during lockdown.
Okay.
So when I worked in the corporate world, I had my W-2 job. I was laid off a couple times from LoopNet when CoStar acquired us. And I realized I can't just depend on my salary. I have to find I have to create additional stream of income in case this happens again. I can't rely on anybody but myself. So I started acquiring real estate. And then I realized, you know what? I'm just going to get a real estate license to see if I can find my own deal and also make a career out of it. Did that for 2 years, wasn't a good fit. And when lockdown had happened, my hands were tied behind my back. I couldn't host any open house, couldn't find any leads. So that's when I pivot. I started to explore other ways of making money through real estate. And one of my investors introduced me to the show, the Real Estate Guy radio show. I'm not sure if you're familiar with the show, run by two fine gentlemen, Robert Helms and Russell Gray. They pitch about real estate syndication on every episode. So as soon as lockdown, as soon as everything went open backed up, I went out to Texas, network with those people, learn from them, and then eventually that's how I got into syndication.
Excellent. So during COVID, it seems like to me, many people that were, I guess, disenfranchised with what they had chosen as their profession. But I think what they experienced was like living my kind of lifestyle, to where I have latitude to do what I want. I have autonomy. I can choose to work today or not work today. My schedule is laid out on about a 35-day cycle, to where I can decide that I'm, going to take a month off, 2 months off, that kind of thing. And my income keeps coming because that's the way that I've set it up. That's the structure that my business is in with what I do for a living. So it seems like to me during COVID, people saw that the actual world did not fall apart, and that you did not have to get up, go to work, slave all day, and then come back and then choose this kind of compartmentalized lifestyle, that you can build a career and a lifestyle at the same time. So good on you for that. I like to hear stories like that. I actually loved COVID. I went to the grocery store every day. I went to Home Depot. They were not going to tell me to stay home. Went to the liquor store. The crazy lady in the back, she wanted me to wear a mask. I wasn't going to do that. But being in South Texas, COVID, in the urban areas, COVID existed. But when you got outside of the urban areas, COVID didn't exist. And also, myself, and now I'm seeing like the stories come out about COVID with cash flow and savings, is that number one, you didn't have anywhere to spend your money. And you went to the grocery store and got exactly what you needed because, supplies were limited. And so you cooked very healthy. You really didn't eat that much junk food. You weren't drinking as much. And so you had all of this savings, you were losing weight, and you were getting clarity. And for people like me, and obviously you, we got something good out of COVID. So I always like to plug COVID a little bit.
Absolutely.
So it says here that you're a generous guy. So talk about your generosity.
Well, that's the sole reason I mentioned earlier why I got into real estate syndication, right? It's my purpose, I feel like, on this planet is to be able to help others, and not just myself, reach financial freedom. I think the ability to give back everyone who has been extremely supportive, to help my mentors reach their goals faster, to my parents who made sacrifices to bring us to the land of opportunity, to friends who believe in me through thick and thin, I'm surrounded by really good people who inspire me to be a better version of myself every day. So therefore, it's the only way, it's the least I can do to give back.
Good. Well, and I believe, and several, mentors and coaches have said this, is that business is the medium for driving purpose and making the world a better place. Not necessarily money, but just the business and the economy of the exchange of ideas. And you either pay for those ideas out of your pocket, or you do it with time, or you do it with an exchange of energies, collaborations. I really believe that, business is the catalyst for change. And I'll get on my tangent about government and institutions and politicians. I don't really believe that the politicians and the institutions of the world are here to make everyone's lives better. I believe that entrepreneurs are that driving force to make everyone around them better. I mean, it's, rising tide raises all boats. If we can make our little niche and our little community better, we can help everybody up. Let's talk about when you came to the US. And I want to go back and plug another episode that I did with another guest. And it's the stories that I hear are the parents were like, we've got to get to America. Is that how your parents were? Were they forced out, or were they, we've got to get to America to have a future for our kids?
Yeah. So my dad has always loved America. He's always wanted to bring us over here to give us the opportunity. My mom hated it because she doesn't speak English. So
Yeah.
she rather live out there in Taiwan if she could, but she's here she made the sacrifice to be with her kids. So so looking back, I used to also hate them for bringing me over here because I just didn't want to learn another language.
Yeah.
But
how old were you?
11 years old.
Okay, so you knew some stuff, like you had experiences.
Mhm.
I think it's once we get past the age of 8, that's when our brain stem actually starts getting developed, and we actually start to retain some of the knowledge that we've been given, that it's not just innate anymore. So where did you land?
In terms of,
Yeah, when you came from Taiwan to the US, where did you live when you first got here?
oh, Palmdale.
Palmdale,
Yeah.
California.
Yeah. Any familiar with the area?
I am a little, I want to say I am. Is that like Riverside County?
No. So Palmdale
No?
is in the middle of nowhere. It's up north towards Bakersfield.
Oh, okay.
It's
Palm Desert then.
Yeah, it's like the desert. It's exactly like Palm Desert, but it's a different place.
Okay.
And it's like the reason why we moved out there, it's about an hour to an hour and a half to drive to LA with traffic, or depending on the traffic. The reason why we moved out there is because first, living expense is cheap. Second, my dad wanted to force me to use English because there's a lot of Chinese people in LA. And, again, looking back, I didn't like that, but, now that I thank him for it, because, if I lived in LA, I'm 100% sure I was going to use Chinese instead of English. And
right.
I may still have an accent.
Right. Exactly. He was very smart, because you can get in a pocket and not then get acclimated. You can just still be in your little circle.
Absolutely.
Yeah.
Mm-hmm.
So Palmdale, I mean, what did your dad do for a living?
International business. We did faucets, sinks, towel bars, anything you find in a bathroom.
Okay. Interesting. I love bathrooms.
Who
Especially
doesn't?
luxurious bathrooms. So where do you live now?
Diamond Bar, which is about 30-40 minutes away from LA, east of LA, towards San Bernardino, Riverside area.
Okay. So Tell me about the Southern California vibe right now. Is it business friendly? Is there some issues going on? You're obviously syndicating in Jacksonville, Florida. You're not syndicating in California. Tell me the reason for that.
Yeah. Well, the politics horrible. I'm not gonna get into that. But and then there's homeless just surging. The government, the senators not doing anything about it. So, point being is the reason why we started to look deals outside of the state. Actually, all my investors are here in California.
Okay.
And I would say probably 2/3 of them have invested in California, made money in California. So have I. Okay. California is a great place to invest. Don't let people out of the state think that, oh, why would you ever invest in California? You can buy and hold, and you can still make money. That's the beauty of California.
California is great, except for the fact that it's in California.
Yeah, exactly.
Yeah. So I was in Hollywood for a little while, Beverly Hills, Pasadena, Temecula, Rancho Bernardo, San Diego, Carlsbad, all during the spring. I was establishing a team out there, and I was like, God, it's just so great. The weather's awesome. Even with it, snowing. It was snowing half the time that I was there, and then raining when it shouldn't have been. San Diego was great. And Rancho Bernardo was just incredible. And I was like, I love this place. But then you actually sit down and you do the numbers. It doesn't make, for me, it didn't make personal economic sense to move there. Just with all it's so extra. Like they want to tack on a fee and this and that for everything that you want to do. So.
Yeah, they can. That's the problem. Is it's like Disneyland charging over the price, way overpriced, but everybody still goes there, right? It's like California, everybody still moves here, so there's a huge demand. But the reason why we started to source out of state deal is because of eviction moratorium. I've seen a lot of my investors got screwed during COVID, where tenants just staying there and not paying rent. And when you mention if it's business friendly, no, it's not. It definitely isn't. That's why we had to source out of state deal, look for an alternative Sunbelt area where it's more landlord friendly, where there's potential growth, population, job growth, and all that, all the matrix. And that's why we chose Florida, because
Have you looked at any deals in Texas?
I have.
Okay.
That would be my second option. In fact, we're looking at a couple of deals right now in Texas as well. So Florida and Texas are my big top favorite.
Well, I hope that you will share those with me. My job is to give my clients the information that, they're not getting from, Gen Pop or off the mainstream news. My job is to give them information so they can make better decisions with their money. So I hope you'll share those with us.
Absolutely. I what part of Texas are you guys interested in?
I'm in San Antonio. We love it here. The politics is a little in the urban dwellings of San Antonio. It's a little California, but can you hear that?
Yeah, but it's all right. Is that your dog?
Hit that out. Yeah.
What kind of dog do you have?
So old. He is a huge, 120-pound white English retriever.
Oh, white.
Huh. Yeah, he's white. You okay, buddy? Okay. We'll edit that. We're in San Antonio, and I want to say, so there's the Golden Triangle of Texas: Dallas, Houston, San Antonio. 500 people are moving to that triangle every single solitary day. So you have places like Corsicana, Texas, Richland Hills Lake, Brenham, Glen, Caldwell, Cameron County, Taylor, You get up into places like Waxahachie. And these are all, small, sleepy towns. And I shouldn't say small. They're all, at least probably 30 to 75,000. They have the infrastructure, and they also have the leadership to be to manage the growth and the progress in a good way to improve their town. We've seen lots of developments around the places like Corsicana and Brenham, College Station, Bryan, because they're college towns. Mm-hmm. There's already, a nice tax base there that they shouldn't have to go up on their taxes once they see people move in, and then development come in, and then you'll see the retailers come in, and then you'll see the services come in. We're working on a similar deal in Kilgore right now. It's 400 acres at the corner of I-20 and 259. A client of mine acquired this property over 14 years ago. And it's at the gateway of the town. People live in Kilgore. They don't go to Kilgore. Half of the people that are employed in Grant County actually live in Kilgore. So you're looking at a sleepy little town, that just wants to be left alone. We don't want a big corporate move in. We just want nice quality housing for people. Mm-hmm. I was visiting with Flint Jameson on an earlier episode, and he's syndicating for build to rent community. And we actually talked about doing a 100-acre development within that particular property for a build to rent. Mm-hmm. Because the end game is so lucrative. Like the Blackstones and the BlackRocks of the world, and numerous others are coming in and they're buying those properties. The build to rent, the single family build to rent model is incredible. There's one going in here in San Antonio right now, already sold out a year ahead of schedule. Wow. And it's like ordering a Tesla. They don't get any choice in, what their home looks like, but it is their home. They are paying for it. They're helping somebody else, to own it. But it's a different type of rental model. I also spoke with a gentleman a couple of episodes ago about and we actually we got a little into it about the choices that people are making with their lifestyle, that they're choosing to have experiences over putting a bunch of money into a home. And he believes that it's a waste to rent. And I'm just not one of those people. But I also live well below and well within my means. I'm not one of these people that I'm going to look to a home as an asset. I truly believe it's a liability. I'm a rich dad, poor dad, Robert Kiyosaki follower. If it's not paying me to own it, I don't want to own it. That's kind of the bottom line. And with more people looking at the conversations that I'm having with my clients is, okay, Brandi, something's coming, something's about to happen. What are we going to do? Well, my clients are already positioned. We can maneuver within the recession once it hits. A recession isn't called until 8 months after the fact. It's 8-month lagging indicator for a recession call. And, right at the end of last year, we were making some repositioning within some of the FANG stocks and some of the ETFs that were technology driven. That's paid off well. Now I'm going into this, or being kind of in the middle of the second quarter now. I'm one of these people who are like, okay, we've done well the first quarter. Let's harvest some gains and let's take a little bit of risk off, but let's leave the majority on the table. Let's just hedge back, not hedge back. Let's take some gains off, reduce our risk a little bit, and then be positioned in cash for opportunities that are going to come along. What's your take on, and you're in residential, you're not looking at commercial at all?
No, multifamily.
Multifamily is your
commercial
target. Okay.
Yeah.
With the coming recession, are you with me on that? Do you agree that it's coming, or that we're already there, just no one wants to actually admit it? Because,
well, I believe we're already there, and
okay.
I totally agree with you. It's always good to have dry powder in this scenario.
Yeah.
That way, once an opportunity arises, you can just tackle it right away.
Do you see more people? Do you see more people being, I guess, easier to deal with when it comes to real estate investing in this passive style? Because there are some people out there that they want to control every single solitary penny. And then there are some people that are like, I just want to be with a good company. I want to feel good about where my money is positioned. I want to know that I'm not only going to get my principal back, but that my money is being used in an efficient way, and that we can combat inflation right now, plus the coming tax increases in 2026.
So it just depends on the stage of investing you're at. That's just my own personal opinion. To give you a little background, why I say the things I said is because I started off as an active investor. When I bought my first real estate deal, 2-bedroom, 1-bathroom condo, 600 square feet, I did everything from A to Z. Run the background check, got the tenant, did the maintenance myself. I was too active involved that I didn't want to be that actively involved. Yeah. So that's when I started to think, no, I got to delegate this. I got to find a property management company. Yeah. I got to have a list of contractors, my go-to vendors. And that's when I started to think about, wait a second, if I'm doing this for my condo, why can't I scale it bigger? Why can't I just do some bigger deals? Because essentially that's what syndication is. It's a team collected effort, right? Every member on the team is very crucial to your success of the deal. So going back to your question, I think, everybody should start off as an active investor. Don't get me wrong. You're going to learn the most, and you're going to make the most money. You have control over which direction it's going. Okay. You have 100% control over it. And most real estate investors, they're okay with that. They want to continue to just be their own individual active investors. They don't want to pass it. They don't ever want partnerships, and that's okay. Everybody's investment strategy is different, but if you want to diversify your portfolio, I highly recommend that you also invest some into passive investment deals, right? It's good. It's always good to diversify a little bit. And at the end of this financial freedom talk that we're speaking right now, I think most of us wants to be more passive than active. Yeah. Right. Once you're at that,
I think once they get into the nitty gritty and they actually see how many details that they have to deal with, that it's so much easier to get your 8% and your, $1 for $1 or $1 for $2 back in 5 years.
Right. Exactly. So that's why vetting the sponsor is a lot more important than vetting the deal. I think most people, they get distracted by the shiny objects. They look at the deal. Oh, this deal looks great. Number is great. But that's just a pro forma. You have to also always remind yourself that. So you have to, just like you mentioned at the beginning of the show, it takes time to build that relationship, to get to know each other and see and see the track record and the experience that the team has. And the way how I combat that to do my first couple of deals is because I have Mark Kinney to oversee my deals from Think Multifamily. So it's all relationship building, and also be able to leverage your network.
Yeah. Have you read The Power of Who?
Sounds familiar. I might have.
Yeah. Bob Bodine out of Dallas, Texas wrote it, and it's about it's a little bit, there's some woo-woo in there, putting yourself, your ideas and your wants and desires out into the world, and then having them come to you when the time is right. he is, or was, I guess he was. He is now retired. Executive search. So when Major League Baseball needed a new commissioner, they hired Bob Bodine to go out and find one. So serious executive searches. And it wasn't about what he knew and what his experience was. It was literally about who he knew, and also being very attentive and very curious about what drove people. Because you can get into these conversations with people about what they really want out of life. And if you come from that place where you just want the best for everybody, you can hear little things along the way and say, hey, I might have some insight for you on that particular thing. Just if you put it out there, that's what happens. I always think the best deals don't come from me in an email blast. The best deals come from, somebody mentioning something about somebody who went somewhere and did this, and it was like, oh, I've been there, and then that conversation starts, and then it's a culmination of just, like-minded energy that flows, and then you can take that, and then that collaboration turns into a business, and then that business turns into cash flow for not only you, but for that other person, and then all the people around you. That's good. I'm glad that you come from kind of that, from that source, I guess, for lack of a better word. Can I ask how old you are?
Yeah, 35.
35. Okay. What's next? Like, not where do you see yourself, but do you basically just start layering deal after deal? Or do you see yourself, doing your own mastermind, or doing your own group, or doing your own management company, or your own property development?
Great question. So I'm the type of person that I like to focus one thing at a time. Even though I have a lot on my plate, I try not to distract myself with other stuff and just focus on creating one thing. And then once I get good at it, and I move on to the next thing.
Now, how do you do that?
So I can give you an example of what I'm currently working on. So during lockdown, right, I pivot to syndication, and then I went out to network. And in 2020, I really wanted to syndicate a deal, but I wasn't able to do so. Now, fast forward to 2021, I was able to go out to, I still continue to put myself out there to network, and I found a business partner through, Investor Summit, which is, run by the Real Estate Guy radio show. They, this is like their biggest event. It costs about like 10 grand to go there. It's to network with, all, like Robert Kiyosaki, George Gammon, and, heavy hitters like that. And so everybody's just learning from each other. And that's how I met my business partner. And I was able to leverage his network to syndicate my deal last year. So reason why he brought me on board is because I can raise capital for him. He does everything from A to Z, but he has 5 kids, and he's running out of time, resources, and so forth. And so he finally needs to delegate. And so I came in to raise capital, but for the first 2 deals, I only raised measly, 200,000-300,000. So I didn't meet that expectation. I set for myself, because in my mind, I thought I could easily raise 500,000, but the market turned, last year, so they say that your first deal is your hardest deal. And tell me about it, right? Interest rate crazy.
Now let me interject with a question.
Mm-hmm.
Do you find that at that particular time your investors were in the market, and so they were losing money and they didn't want to liquidate? Or were you talking with people that did have cash and on the sidelines waiting to deploy?
Both.
Okay.
Both.
Okay.
Yeah, I have like my brother, for example. He has his money stuck in the stock market, and he said he has the money to invest, but he's not going to sell it at a loss. There's nothing you can do about that, right?
Yeah.
Yeah. So
but that's that I think that's a mindset, and I talk with people every day about that. When when you can not compare, but when you can actually take that money out of the market and flow it into something that makes that money that was in the market not a loss anymore. Because there are advantages to selling at a loss. It's called.
Yeah, I mean, trust me, I tried everything. He's my brother.
Yeah.
Couldn't get him to sell.
The people that listen and that watch this show, they're trying to put the pieces together for themselves. And, at the end of this video, on YouTube and also on Spotify and iTunes, I plead and beg people to let me put all of your puzzle pieces on one sheet of paper, because it seems like everybody's trying to take all of their pieces of their financial puzzle and then piece them together with these, with these kinds of shows. And there's tools that you can not invest in. There's tools that I have where you can put all those pieces on the pieces of the puzzle on one sheet of paper and see how either they are working together or they're not working together. And I believe that cash flowing assets is what makes people truly wealthy, and that can give them that passive income lifestyle that they truly want. So
absolutely,
your brother.
Yeah. So continuing on with my story is that
Sure.
I didn't raise much, and now I had to step back and think about how can I continue to add value to my business partner by raising capital. And so I joined a mastermind group called Raise Master, run by Hunter Thompson. And basically he teaches you everything about how to raise capital, build a system, digital marketing platform, essentially. And that's what I'm working on. And it's just investor. So now I've pretty much transitioned from just raising capital to investor relation and marketing. Because right now, that's what I'm building. I just built my website last year, wrote newsletter, ebook, and then I'm on podcast shows. Also, I created my own real estate meetup group in my community, in my city. So just trying to put myself out there as much as I can. That way, once I have a deal, I can send it out to the audience I've built. And eventually, when you mention what I see myself 5 years or whatever, down the future, well, I want to be able to raise so much capital that I have more capital that deals. And then I can transition to become an operator, and be my own lead sponsor. And then from there, once I build up a nice, healthy portfolio, then it would be speaking engagement, build more audience, and then let's see where we go from there. Just like Grant Cardone.
There you go. He's a polarizing guy, and I love his one tagline. He says, "You don't have to like me, you just need to know me." I like him. I'm a fan.
Mr. 10X.
Well, thank you so much for today. I want to get more guests like you that have this passion and this drive and this motivation to truly help people. It just so happens that we're in business as well. Mm-hmm. I'm going to share your website. Do you want me to list all the people that you mentioned, or do you just want me to send them straight to your website?
The people that I mentioned?
No. Yeah.
I mean, it's up to you.
Okay.
However you want to. Yeah, that's totally up to you. It's your show. You're the hostess. So
why don't we do this? Why don't we make another date for 60 days from now, and let's see how your syndication is going. And I'm sure I can plug into your website and get all the details for the deals that you have rolling right now. And I'll send that out to my private investor list. How is it that, like today with this interview, what is the one thing that you would like to get out of this interview from the audience's perspective? What would you like to share with them the most?
Well, if there's one thing, I think you may have heard of this already since you're a Robert Kiyosaki fan. I think one thing I would definitely do differently if I could, is always stay on the edge of the coin. So there's two sides of the coin, right? There's the heads, tails, and the edge. By staying on the edge, you're able to learn so much more. I used to be very close-minded. I used to be so one-sided, kind of like in politics, there's the far left and far right, so I think it's a horrible mindset, because you're not opening up your mind to the possibility of learning on what's on the other side. And by staying on the edge, you can learn, you get the best of both worlds, so that's what I would recommend your audience to always try to stay on the edge.
I love that. Thank you so much for today.
Absolutely.
All
Thanks for
right.
having me.
Thank you.
Mhm.